Hello, welcome to Real Day Trading. I wanted to throw together a quick video. This is going to be kind of off the cuff, so nothing is pre-planned in this video because SPY, the market, a lot of these stocks, there's no other way to say it. They were weird. I mean, weird as shit today. I'm not going to sit here and try to Monday morning quarterback it with you. And oh well, clearly the SPY hit support here on an algo line and then bounced up here. And yeah, okay, no, it was weird. That's it, and I'll tell you why it was weird. You have heavy volume, right? The relative volume 1.28. And here you have SPY today. It doesn't try to get through the 50-day moving average here, right? Even though it could have when it opened today, it could have when it ran up to here in the beginning, it ran up to around 465. It could have easily started to challenge it there, but no, it didn't want to do that. So backed off, dropped, and then double bottom, pops back up again. People start buying, getting a little aggressive, and then bam, drops it again. Now you're thinking, all right, well, it's probably going to go down, maybe challenge the 100-day moving average. Nope, doesn't want to do that either. Pops back up again. Yeah, there's a holiday weekend coming up, and bulls could have been more in control. I can't. Yeah, bulls can say they won the day, and bears can say they won the day. I don't think anybody won this day. It was just weird. The one thing that's definite, the market doesn't stay weird for long. It always figures out what it wants to do. And if you go back once again to my comparison here to late September, there were other weird days like that right here. Here's one here on September 22nd, where it went up, but it didn't quite challenge the 50, and it went down and it didn't quite challenge the 100. It's right there. What happened the next day? It gapped up, right? So here you have 922 and 923, you have a gap up. And that stayed like that for 2 to 3 days until bam, it dropped right back down again. Same thing happened over here on 10/7, where it ran up to try to challenge the 50 and fell down, didn't quite really try to challenge the 100, but then the next day it drops. So these are kind of indecision candles that really are giving you no direction. Anyone who says that they know where SPY is going to go next week or the market's going to go next week, there are arguments on both sides, running up into earnings, and you have interest rates putting the more pressure on the tech earnings, all of that. There are plenty of arguments on both sides. So I made a ton of trades today. Why? I have no idea. I just did. And there are two ways you can deal with a situation like this. You can either make sure you are flat and go into the weekend in cash, or like me, I have, 15 positions here. I pretty much equally divided them bearish and bullish. I'll go through some of the positions and show you how frustrating some were. So for example, Macy's. Okay. Well, Macy's, I took Macy's, and you could see here, Macy's very, very bearish. And when I took it below the 100-day moving average, 100-day moving average of 25.95, it finished just above that, tad above it. Took Macy's, it dropped all the way down. I could have had a nice profit here, but instead it kept it and it ran back up again. The sector, when we look at sectors, this is the consumer cyclical sector, department stores, which is consumer is SX20 here, and department stores on that sector is IX 1340. IX 1340. So let's just take a look here real quick at IX 1340. Comparisons. Let's do IX 1340, which clearly means department store. IX 1340. What else could it possibly mean? Okay, there it is plotted. And that whole sector is kind of down. You can see here, pretty sharp drop. And the trend is down pretty significant too. The volume, it's flat, as is the stock. So again, right here, this whole thing is a compression, but it's got a slight downward slope here. Never really recovered, and it's trapped in this range. Looks like it's hanging out in the lower section of the range. Didn't have much relative strength. In fact, it had relative weakness early on, but it reversed. Here's an odd one. ATVI. This one here broke down below its 50-day moving average right here. Well, I guess we could take the sector off. It's not exactly a department store now, is it? Okay. This is technology, electronic gamings, and multimedia. So let's just get that up. Technology, electronic gamings, games, and multimedia. There it is, IX 2300. So we'll just put, okay, ATVI, and then IX 2300, IX 2300. Sector way down. Stock actually wound up, but started out dropping here and then pops back up. Seems to be a common theme here today. Starting off with a huge drop, popping back up. Now, either it's a bear trap or a bull trap. Again, weird. Some news events we had today. We had Lucid always seems to have a news event. Had a news event right here, opening up some factories. I went long on Lucid. Netflix raising their fees. Last time I did that, bumped up, and then it just continued to go. I was way back over here. So you can see Netflix. So I put some calls on that for next week. We have TSM here. TSM here clears its algo line on a gap up over here, stays above that line. But during the day, pulls back again. So every stock that started down wound up going up. Every stock that starts up wound up going down. That tells me a lot of people probably lost some money today, including, by the way, look at Disney. Once again, same pattern, right? Dropping, going up. Same exact pattern. Walmart going up, dropping. Same pattern again. I went long CVS, which actually had a normal pattern. So it's the one position I have that has some degree of normalcy to it. So here I have all these positions. I am long Walmart, long TSM, long CVS. I am long LCID. I am long Netflix. I'm short Nvidia. I am short Macy's, short ATVI, short Disney, short AVGO. That's a lot of positions I currently have right now. And one could argue that isn't the best way to trade. I'm also short PayPal, by the way. I didn't add that one in. What else do I have here? I'm short PayPal. Yep, that's it. Okay, so long Walmart, long TSM, short PayPal, short Nvidia, long Netflix, short Macy's, long Lucid, short Disney, long CVS, short AVGO, and short ATVI. Those pretty much cover my positions. And long apple from a while ago. I'm just holding that. It's fine. So that's a balanced method when you don't know what the hell a SPY is going to do. Some are about half are long, half are short. They're hedged against each other, but each one are kind of in very particular sectors. So there is a good chance that come Tuesday, my shorts will be down and my longs will be up. There's also a chance that my longs will be down and my shorts will be up, and that would suck. But I'm going with some of the daily trends here. However, the videos should not always be about, oh, look how great my trade was. Look how smart I am and how stupid you are for not being able to do it. What's wrong with you? No, we all screw up. All of us do. Should I have gotten out of Macy's when it finishes above the 100-day moving average? Yeah, I should have. No reason for me to stay in Macy's. Should I have gotten out of Activision when it breaches and goes back above the 50-day moving average, which is at 63.42, which means should have I gotten out right around here after a 3-8 cross and green stacked candles, and it crosses back north of its 50-day moving average? Yep, I should have gotten out of that trade as well. I should not be in either of those. What about Disney? Should I have gotten out of Disney here? Well, Disney's all the way down here, huge gap down. No, I'm okay staying in Disney for the moment. I'm okay being short here. That, even though it's kind of a bullish doji here, I don't see Disney recovering much. This was a bounce due to Netflix, so we'll see. A question was also asked on with Netflix when people said, well, yeah, but we don't like the daily chart and we depend so much on the daily chart. So if the daily chart's bad, why are we long? Why am I long Netflix? And here, look at this downward sloping algo line, it's got to breach that. So yeah, usually, technically, until Netflix breaches around 589, 590, it doesn't really have a bullish pattern. News events, particularly news events that have history, so you can go back and see what happened previous times that similar news occurred, can overcome a daily chart, good or bad, right? Certainly earnings can do that. If you can have a great daily chart and a stock reports, their company reports terrible earnings, well, that kind of throws the daily chart out the window and the earnings take precedent. Netflix raising their rates is a significant event that's happened in the past and resulted in dramatic increases in the stock over time. That overcomes what normally would be a pretty shitty daily chart here with several sloping trend lines there. You could draw lines on this damn thing all day and it doesn't look good. But the news event should circumvent that. Okay. That is where we are heading into this long weekend. Once again, I see people who are saying that they lost a bunch of money today. But granted, by the way, I have to point out a whole bunch of people in the chat had incredible days today. Just 10-1, 10 wins, 1 loss, 7 wins, 0 losses. These are people who 3 months ago were grabbing at low float gappers and trying to make 30 cents off of a shitty stock. And now they're putting up great trade after great trade after great trade. So I don't want to make it seem like everybody is, screaming that they've gotten crushed. But I am seeing a bunch of traders who are saying that they had a terrible day. I saw someone say 30, 40% of their account was wiped out. There it still boggles my mind. How hard is this concept? If you are not a profitable trader, meaning you cannot consistently put up profitable months, why are you trading more than one share, one contract at a time, period? That's what you should be doing. You should be trading as minimal as possible, putting it into your journal, and then looking at your win rate and looking at your mistakes and not increasing your size until you can have a consistently high, and I'm talking 75% or higher win rate on your account. But yet people refuse to do that, and it doesn't make any sense. I've said it before, I will say it again. Most of you are probably familiar with the fact that you can spend 10, 15 years working your ass off for company after company, just trying to get that promotion, get that small little office, move out of the cubicle, become a VP, a manager, work your way up to make what, 120, 150K a year after 10 years of working nights and weekends. And for a company that doesn't give a shit about you. The first sign that the bottom line is in trouble, you know, HR is calling you in and they're going to have to let you go. But you worked your ass off to get there. So do you honestly think that a job that can pay significantly more than that with absolute freedom, you're your own boss, there's no asshole boss who doesn't know what the hell they're doing, telling you, bossing you around, treating you like crap? No, you're your own boss. Well, maybe you treat yourself like crap, fine, but that's your problem. You're your own boss. You make your own hours other than the market, but I mean, you want to take a day off, take a day off. You know, you want to take a week off, take a week off. It's all up to how much your lifestyle and bills depend on your revenue. It's like running your own business, employee of one. How much is that worth? Is that worth, I don't know, 1/10 of the time, effort, and energy you put in to get that shitty little mid-management level position? Is it worth 1/20th of that? Because people seem to think that after 3 weeks, 3 months, they should be profitable. That it doesn't work like that. It just doesn't. It takes time. It takes a lot of time. I'm talking 2 years of working at it, studying the charts, putting down alerts, looking at different setups, learning the strategy, perfecting the method, journaling it, going back, looking at your success rates and win rates, figuring out what you're doing right and what you're doing wrong, until you will be able to put together profitable month after profitable month. I don't understand why that concept's so hard to understand. And anyone who's telling you different are fleecing you. They're taking your money and feeding you a bunch of bullshit. Whatever they're telling you, if it doesn't involve, hey, you're going to need to work your ass off for about 2 years to get to a point that you can say, I can do this full time, they're lying to you. It's as simple as that. And I guarantee you, not one of them can outtrade me. And if they can, my promise stands. If any single one of these so-called gurus out there think they can outtrade me over the period of 100 trades, I will publicly endorse their service and platform and tell every single one of my followers on Twitter, on Reddit, here, that they should sign up for this service. But if they can't, if they are not more profitable after 100 trades, then they need to refund every single one of the people that signed up for their offering. Somehow I think no one's going to take me up on that. But if you have paid for any of these services, you should throw it out there, because I can double their business overnight if they can just out trade me. Anyway, got off on a little bit of a rant there, but as you see, I have an insane number of positions. It will be interesting to see on Tuesday what happens. So I'm going to do a follow-up video, and we will see what became of all of those positions. And for the record, the total number here is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 positions. Okay, I'm going into the weekend with 12 open positions. That's brilliant. And is there anything else I wanted to leave you with today? Got a lot of good searches, a lot of good stocks. If the market wasn't acting so freaking weird, would have been even better. But there are a lot of good potential swings that you can look at. For example, let's just grab one here off the top of this trade, win. Let's just take a quick look at it together. All right, let's just do a quick swing analysis here. Don't mean a thing if it ain't got that swing. All right, win. Looking at it here, do we have an algo line here? Not really. We do have a sloping trend line. Seems to come in and intersect right around there. Win could not get above it. I would not go long on win. Where would that go into, right? Yeah, it would pretty much come right to the top here today. So what I would do is, the high for today was 92.38. I'm just gonna set a price alert here for 92.38. I'll just set it for 92.75. Give it some space. And when win decides to go above that, great. Let's see if there are any others that I can grab here. Plus AMAT. Okay, AMAT. What do we got here? AMAT. What are we looking at? Oh, this looks nice. AMAT, all-time high. Love stocks at an all-time high. Stocks at an all-time high are actually the most likely to continue being bullish. It's through that. It's through horizontal support. It is, any way you slice it, AMAT is a really, really good looking stock. You can do several things with that. Any type of bullish put spread on AMAT would have to be below here, around, looks like, I don't know, 140, 143. You could do a 217 is when they have earnings. So let's see here, 143, 143, 141. I'm going to get 23-cent credit there. Let me go out another week, February 11th. No, let's go out one more to February 18th. And just see here, I'm not going to get the credit you need for AMAT, but it is very strong. So I would definitely recommend on something like AMAT, you could either buy the stock. That is one possibility. Obviously, it's strong, looks good. You can go straight options on something like AMAT. This is a good swing stock right here. This is what you're looking for, exactly what you would be looking for. Right. So that is a great long swing. I don't see a good bullish put spread for it, but the January 28th 165 calls for $6. That's not bad. That's not a bad option to use. I wonder, I'm going to see here. Yeah, No, no, and no, it's not. Okay. And let's see if we can find one on the other side of the ledger. Up there. Okay. Home Depot. Home Depot. Whenever you go there, I always feel like I should be building something. Home Depot trapped here, not yet through there. You need to see, it does have a nice cap down, but I wouldn't do anything with Home Depot right now. Let's just see here. DG, Dollar General, I think that is, right? Dollar General, there we go. That one looks like crap. Okay. Dollar General here. I'm gonna do a see where support is. Notice how I just zoomed out, looked for that low candle, quickly checked to see that I had volume. There we are. Support's not down until 210. This is a good overnight short. Dollar General. Right? It did pop. Of course, it did what every other weird stock did today. Went down and popped back the hell up. So that would be a decent short there. Okay, let's see if we can find, because people like longs. There are some long only traders out there, and if that's you, you need to get over that shit. That is only using half the tools in your toolbox. Lockheed Martin always sounds like a very ominous Armageddon causing company. Not that I'm not all for Armageddon. Yeah, this one breached right through the algo line today. Great stock, really great. And it's at 372. We got support there. We got some support here. 355, decent place if you wanted to put a bullish put spread on for LMT. And 355, you could probably, well, never mind, it has earnings on 125, so it wouldn't do it, but this would be a decent stock to just do a call on. Okay, well, there we have some stock choices and ideas, and I will revisit my positions, all my damn positions, on Tuesday. Until then, I hope you all have a great weekend, but I will probably do another video tomorrow or Sunday or Monday, one of these days. So, okay. I'll talk to you all soon. And the weekend, by the way, is a great time to read the damn wiki. Good night.